Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. I would love to swing this as much as I, could here, but I'd hit about 10 different things, including some expensive cameras, so I can't do that. But nonetheless, we broke out the golf club for all you golf fanatics out there, as summer is upon us, and hopefully everyone gets some downtime to relax. All right. Lots to discuss today, right? We have the retail sales numbers that just hit the markets. We have crypto overnight flushing lower. Bitcoin is struggling to hold on to that key level. We have stocks on the move, including the mega caps, of course, trying to lift the NASDAQ for its 31st new all-time high for the year. All of these we are going to cover. All right, Tim, you ready? I'm going to throw this to you. Ready? There we go. Let's get started. Woo, good catch. All right, into the action we go, guys. Let's talk about the SPY here. Number one, what do we have? We have a market that is basically flattish on the pre-market session, right? So yesterday we basically closed. You had that little bit of a late day sell-off right here. I'm going to zoom in a little bit more so we can see a little bit closer, right? So again, if we look at this chart here, this is where we closed yesterday on the SPY. This is where we are currently trading. We are down ever so slightly because, again, what's lifting the market? Apple is up. Last I checked, Microsoft was up. Nvidia is basically flat. And remember, those three companies equal $10+ trillion now, a massive amount. Basically, again, the six top companies, all those trillion-dollar companies, 33% of the S&P 500. So if for the most part they're flat to positive, every other stock could be down and the markets could still be basically flat on the day. Now, what happens? Do eventually we see a big sell-off? Yes. When you get over-concentration like this, if everyone runs out of them at once, it can create a crash in the markets. It's something that no one's talking about. It's very, very unlikely, but it is something that has to be noted. So just keep an eye on that, just in case we all of a sudden see a mass exodus and fear and panic take over. Now, a couple things to go over here. We did get retail sales numbers today. Now, last month, all right, let's talk last month. Last month was a negative 0.2%. All right, so we saw retail sales last month very sharply lower. That's actually a big drop, right? I mean, when you're talking retail sales, that can be billions and billions of dollars less in spending from consumers. This month, we were supposed to see a rebound in consumer spending. It was supposed to be plus 0.3%. So basically the idea from economists, and I'll put a line in between those, was that we would basically see, all right, consumers slowed down last month, but they'll rebound this month. Well, guess what? The number only came in at plus 0.1%. That, again, is not good. That tells you that the consumer is not rushing back to spend and make up the difference from the previous month. It's only an ever so slight increase over last month's spending slowdown. Now, again, what's interesting here is we are constantly talking about this in the game plan. Is good news good news? Is good news bad news? Is bad news good news? I mean, what's the right thing? Because for the longest time, we saw that bad news was good because it meant the Fed could cut more interest rates, right? Or cut more times on interest rates. The issue now we're facing is that it's starting to be bad news is bad news. Now, only slightly. It's still more of a gray area to slightly that way. But again, what we can see here on the pre-market data on the SPY is initially on that weaker retail sales number, we did see the initial pop right here. You saw a little bit of an uptick. And then you know what? All of a sudden, people are like, wait a minute. This might not be so good. And this is the kicker, guys. Remember, if you get a slowdown in the economy, historically, the Fed is always late to the punch. So they're going to be conservative on cutting rates because they're worried about replicating what happened in the 70s. In addition, Jerome Powell has said this many times, but you also have to remember that they're looking at data and they're very scared about inflation starting to roar back. That would be the worst thing of all if you have that scenario occur, right? Inflation is something that it hurts the lower and middle income groups more. And that's something that we're becoming very aware of. The rich are doing fine, right? I mean, if you're rich and you're invested in this market heavily, you don't even notice inflation at this point, right? But anyone in that mid to lower tier is getting crushed by it. So the Federal Reserve is very keen on this point about keeping inflation lower, and that means they could be slow to cut rates even if the economy starts going downhill. Okay, so just something to remember about that. So we are starting to see bad news is a little bit more bad news as we see the markets just inching down ever so slightly. Now, I do want to show you a couple levels. You can see a trend line here. This is the intraday 10-minute chart, but I'm going to flip to the daily chart, just one level I'm watching. And let's be honest, I'll be the first to tell you guys that for the most part, the market has blown through almost all technical levels recently. Now, why is that? Well, because you basically have three stocks that are just dominating, and as long as those go up, doesn't matter what the other stocks are doing. Remember, I talked about this yesterday, is that if you look at the crocodile jaws of the market, right? If you look at the market and you say, what is the equal weight, basically equal weight S&P, this is what the equal weight looks like, right? So the equal weight S&P, where everything is equal, every company in the S&P 500 is equal weighted, it's actually been going down because a lot of stocks are making new lows. In fact, yesterday there were 61 new all-time highs in the NASDAQ. There were over 200 new all-time lows. Think about that. Well, maybe 52-week lows, maybe not all-time lows, but still, my point is the NASDAQ was up yesterday, and you had over 200 new 52-week lows with only 60 new highs. That's a scary stat right there. That does not show an internal strength in the market, that's for sure. In any case, the equal weight looks like this. The S&P looks like that. That creates those crocodile jaws. You can draw your teeth in, whatever you want to do to make it even more cool looking. But the idea is, again, at some point this has to shut, and you just don't know when it's going to happen. But the more divergence you get, the more the economy, the real economy, is suffering while just a few companies are keeping it up. And at some point, investors will panic, right? I mean, it's just inevitable. We see it. Doesn't matter how long it's been, how much Fed intervention. You can only prolong the fear so long, and then the collapse is much bigger. And again, that's really my fear, is that this is something that I've had a gripe with for the longest time. And this is a little side note here, is that if you look back historically, the recessions and expansionary periods look like this, right? This is a normal economy, right? So you have these gentle rolling hills. This is your expansion. This is your contraction. This is what the Fed has done. The Fed has intervened, and then like that, when it finally collapsed. That's 1999, 2000, that's 2007. The problem is we're now at a point where the Fed has intervened so much, and the government kind of too, by spending so much money outside of our means and running up the debt, that you've now had something like this. I mean, basically this, and when it collapses, it's going to be like that, right? Because again, it's like, think about this. Let's just say you're feeding drugs into someone, right? And you're just pumping them with more and more drugs. It's great in the time being. They're feeling great. But eventually, we know what happens, right? The OD, the collapse, the heart attack, whatever you want to call it, and it just gets crushed. And that's my fear for the market. Now, again, timing-wise, who the heck knows, right? I mean, how much longer can they do and say and do all these things to kind of fix it, or keep it piecemeal together until that comes. All right, in any case, on to these other things here, guys. I do want to just show the Russell again. The Russell is a great indicator, and a great indicator of the overall economy. 2,000 stocks. You have a head and shoulder pattern here. We have not taken out the 2021 highs. Watch this level right here. It's around 194. That's your neckline of your head and shoulders. If you break your neckline of your head and shoulders, you can actually calculate the general target. You take the highest point of the head, which would be up here, drop a plumb line down, and run that break. Wherever that break is, you take that same distance and replicate it down here. That would be about a 15% drop on the Russell 2000. Again, could the mega caps keep us up even in spite of that? Maybe, but they would have to really be strong if things start dropping that much to kind of overcompensate. One stock pre-market that's on the move this morning is Lennar. Lennar is down. They reported earnings yesterday after the bell. Their earnings were decent. The issue with Lennar, and you could see initially it spiked up because the earnings were decent. The issue with Lennar is this, is that they basically said that they are having to incentivize home buyers excessively to keep them buying, to keep these home buyers buying. And so we know that that's not a good thing. Like, how much do you have to keep incentivizing? You just keep, giving discounts, you keep giving perks, whether it's a lower mortgage rate, whether it's, furnishings for your house, whether it's whatever it is. Eventually that's unsustainable, right? So what that tells us as well is that the housing market is starting to weaken. We've seen inventories continuing to climb quite a bit in most locations around the U.S., up 50 to 100% in inventories from 1 year ago. Incredible amount of inventory flow on the market. We're seeing price cuts, especially here in Florida. Price cuts are getting to be near record levels. Like, it is to levels we haven't seen, honestly, since like 08, 09 type stuff. So it is getting worse in certain locations. I think Florida is one of the worst ones because of the storms down here. That's kind of holding buyers back as well because of the hurricanes and so on and so forth. And honestly, the insurance costs. The insurance costs are absolutely lunatic or lunacy in this area. And I guess around the globe or around the U.S. it is for most places as well. All right. In any case, let's get on. Here we go. Couple stocks that I'm liking here. This is a stock that I've actually liked for the last month or two. It's been chopping inside of this range. It took a dip the last couple days. Notice this trend line here. This is Zoom, for those of you that don't know. Zoom, again, it's trading at a forward PE of like 10. I continue to think in terms of a market that is so overdone with PE ratios in the 30, 40, 50 range on a lot of these big players, one that's below 10 looks interesting to me. So keep an eye on this trend line. We just tagged the low end here, and again, we did bounce a little bit yesterday. Let's see if it continues down or does it get the technical bounce. The other sleeper I have, guys, is just an idea. This is Intel. Now, every single other chip stock, Micron, Taiwan Semi, Nvidia, Broadcom, I mean, you name it. Every other chip stock is at 52-week all-time highs. Poor Intel. Poor Intel is down here, right? I mean, it literally is flatlining down here. But is that an opportunity for us? Will the momentum sweep this up and see it pop back, or are they priced at a point where any sort of small AI news from Intel could send this thing vertically to the upside? So again, only because it's this type of market with the lunacy of, buy anything that has basically AI and semiconductor in the same sentence. But this one could be of interest. In the very least, I could see it getting back to this gap fill right here, which was a key point following that last earnings report that came out. So again, just something to kind of keep an eye on there on Intel. It is one that I am keeping an eye on myself on, all right? Couple other things to go over here. I do want to just quickly go over, and we're going to do a drawing here, so let's do that right now. Yesterday, we had smart money crypto. By the way, last night, when crypto flushed, I was on a buying frenzy in the service, buying multiple different cryptocurrencies as they dipped into key technical levels that I literally had given people weeks, if not months in advance. I said, watch this level on Cardano, watch this level on Solana, watch this here. And they were just like, boom, boom, boom. It's the patience and the discipline that does it all there. So that's all in that service, and someone will win 3 months free today of smart money crypto. But again, we had a bunch, I think 4 or 5 trades last night that went out on the long side of the crypto markets on that flush. All right, the winner today, Ronzo777. Good there, good easy name there. Congratulations, Ronzo. Don't forget to reach out to Lawton at verifiedinvesting.com. All right, we're going to spin the wheel of appreciation right here, guys. Find out what tomorrow's winner will get. And let's do that now. And as always, folks, don't forget, you got to share this game plan on one of your socials, post as a comment underneath, and that'll be it. Smart money commodities, that's cool. And make sure to follow Verified Investing. Remember, Lawton checks all of these things, and if you don't do one of them, you're disqualified. So you have to be a follower on one of the socials, either on YouTube or on Twitter, and then you also have to do the sharing there. And again, this is awesome, guys. Smart Money Commodities are the latest product that I do, or the service that I do. 2 videos every single day, going over the key levels, the trade signals, the charting, and we cover like literally aluminum, zinc, nickel, gold, silver, platinum, palladium, every single day, 2 videos a day, guys. Pretty incredible stuff in this service. But either way, that's tomorrow's winner, and we'll find out who that is then. All right, what we're going to do now, folks, is we're going to thank our amazing sponsor, iTrust Capital. Again, you guys check them out, because if you're someone who likes crypto longer term like me, they are the place to go to start putting away some in something like an IRA or something like that. So take 30 seconds here and watch this.
Do you have an existing IRA or retirement account? iTrust allows you to buy and sell crypto, gold, and silver all right within your IRA. And the best part is, they make it simple. All you have to do is transfer your preferable amount of USD through iTrust, and then invest that into crypto or precious metals on the platform. To get access, use the link below to find out more about investing through iTrust Capital.
All right, guys, we are back there. What do we have here? This is the Bitcoin chart. We know our Bitcoin cross-section here. We have our support level here. We have a secondary level here. We are borderline breaking. Now, yesterday we were below as well, right? But the key here is that we actually came back up and closed back above. How many lives does Bitcoin have? right? I mean, this is really remarkable. Very few times in history I have seen a chart dance on a level and pierce it so many times. I mean, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 times now we have pierced this line, and it's still holding. Now, is that bullish or is that bearish? To be honest, you have to give the credit. As long as it closes above the lines here, that's good. If it doesn't, though, watch out below, because what will happen is the bulls right now feel emboldened. They're holding the line, right? Hold the line, baby. And that's fine. If it breaks and closes below, the bulls are going to be dejected, and the bears are going to be like, boom, let's pound this thing down. So just watch it. This is why technical analysis is so important, because it literally gives you these pivot points that you can follow on a chart, and you get a sense of when big breaks are going to come. The charts tell you that. It's really remarkable. All right, in any case, we're watching right here, guys. You have a cross-section of two lines. Can Bitcoin rally back to, like, let's say 65,500, keeping above that level? Or does it close below? I think anything below 65 would be bearish. A close even at, right now it's 64,988. Anything below 65 I would be very concerned about, and I'll update you in trading the close today. By the way, folks, I think you're seeing it at the bottom of the screen. Tomorrow the stock market is closed, but we're doing an exclusive Pro Trader Live 2-hour event, but only on Verified Investing. It won't be on YouTube for the public. It is just for people that come to the homepage tomorrow at 9 a.m. Eastern Time. I myself, Dr. B, Ben, all the pro traders converging. We're going to take questions. You can submit questions to me. You can submit questions to them. We'll cover charts for 2 hours tomorrow, and we can go over crypto, commodities, Forex, you name it. Stocks, you want to talk anything, we can go over it. So don't forget, put it on your calendar, 9 a.m. tomorrow morning, 2-hour live stream, but only right here at verifiedinvesting.com on the homepage. All right, on to a couple other charts. I do want to just cover a couple other cryptos today because crypto is in action. Ethereum, great little dump here on ETH. But again, for me, not quite at a level just yet. I am watching this area right here. So again, I have this lower level here at 3,100, but at 3,200, there's also this level here. And again, this would probably be my first place to maybe inch in just a little bit. I'm not sure yet, but if we do see a bigger dump, I'll basically be looking at this zone right here as maybe a small accumulation area. Looking at Solana, let's take a look at SOL here and see what we got on that one. And if we look at Solana here, I want to show you guys this. So there's a trend line here, and again, I'm trying to get it as accurate as possible, that we've pierced right at this zone here. So we could see, again, came right in here. We've pierced it, but we've already got a little bit of a bounce. We're already up on this trade in smart money crypto right now, as we bought just around that 130 level. But then I have additional supports at 120 that will be significant here as well. Now, again, remember, folks, these are swing trades for me. So I could be out with members as early as today or tomorrow, depending on what it does and what the price action that I see shows us. I'll quickly do Cardano. Cardano's been one that's a fan favorite out there as well, and I know a lot of you guys are out there. So take a look at Cardano. This is another one we bought in smart money crypto, and I'll show you why. Basically, we have a trend line here, and if I zoom out, well, I can't zoom out that far, but basically right here, if you guys can see this, you have a level going back all the way to April of 2023, slicing through here down to about 33 cents, and then this flat top right here with this bottom area right up here, sloping up a little bit to about 36 cents. So this zone here is a big level on Cardano, but please notice that the chart told you these breakdowns were coming, guys. I literally told members, and there, people were like, people joining the service over the last month, they're like, man, Gareth has a couple shorts out there. He's making money. We closed out 20% on Chainlink. But, like, why isn't he going long anything? Oh, my goodness, I want to do longs, It's like, dude, I'm not going to put out a trade that's a crappy trade. It's got to be with the charts. Listen, naturally, I have some crappy trades. That's just the nature of being a trader. But you don't want to do it when you see patterns like this forming. This is a bear flag, right? I mean, look at the flagpole, and then like that. That's exactly what you have right here. That's bearish. It told us it was going to break down. All right, so many charts like this, even on Avalanche, right? If we go to Avalanche, and I know I'm getting distracted with a lot of cryptos today, but it is in play. if you look at Avalanche, so number one, this is an old chart here. Let me go here with this up channel. So this was the initial breakdown, and this was one we caught, right? Great flush. But then same thing, bear flag, right? The other thing to be aware of, though, is Avalanche actually had a head and shoulders pattern that has just broken down as well. And I'll just show you guys this on the chart, is that very, very clear. We have the shoulder, head, and shoulder, and then your neckline, guys, I mean, once that breaks, boom, to the downside. Right there. So lots of bearish charts on the altcoins told me to be very careful about going long. And again, I know there's lots of services out there that'll be like, oh, let's do this, and then they lose. But again, the key is you got to know your chart setups and their warning signs. It doesn't mean you can't get in, get out real quick, but you got to be careful. When the bigger picture is bearish, you want to step back on that. I will say this, Bitcoin up until now, and we'll have to see where it closes, that's been the one crypto that's actually looked reasonably good. Ethereum as well. The rest of them mostly bad. Toncoin's held up well. I will give Toncoin credit. We covered that one on a daily basis as well. All right, gold. Gold bear flag formation continuing. Again, there's your flagpole right here. There's your kind of little consolidation. Again, as of now, generally, you would expect a move to the downside on this. I have my target zone right here for where I'm going to start to nibble a little bit. We'll continue to follow that one. And if we go to silver real quick here, silver continues to be right around big support right here, 28.50 to 29. Lots of support. I am still not in silver because I'm a little concerned about this move with this sideways consolidation, but I am keeping a close eye on it. I still remain neutral to positive on silver as well as gold, as well as platinum and palladium. On a mid to longer term basis, it's just about finding where the pullback will stop before, in my opinion, the next bigger macro move comes into play. Oil here as well. Let's take a look at oil. Oil flat on the day, but had a good move yesterday. I'm now isolating this area right up here. There's two trend lines, one going back a distance. Here's your former head and shoulders. By the way, this was a great example. Head and shoulders, take your highest point, drop your plumb line down, take that, and you take from here, and it basically gave us this low right here. Classic example of using the methodology that I teach to figure out where your targets are going to be. But now it's bouncing. Retrace to the scene of the crime right there. That will be a good level for a pullback if we can get there. Lastly, natural gas, guys. We'll talk about this. Natural gas had come right into this little trend line yesterday, getting a small bounce today. My guess is that we're going to do this, right? So in general, I'm going to watch the pattern, but maybe something like this, and then one more move down. On the other hand, if it starts to get too vertical, then you actually look at resistance here, but eventually a breakout. So the pattern, and this is really important, guys. People say, oh, well, which way is it going to go? Sometimes you don't know. Sometimes the pattern is just starting to form. You have to let it mature. Let it mature. Is it going to do what we would call a bear flag, like down like this, right? Or is it going to go like this, in which case that's much more bullish. That shows more strength. Then maybe it consolidates and then breaks out with a bull flag up there. Let it form. There's no rush. There's always a trade. That's one of the things I've always learned, guys, is that I will miss literally every day trading. I'll miss hundreds of trades. It doesn't matter. I just need to catch a couple, and the rest takes care of itself. And so discipline is key, being patient, looking at charts, learning charts. That's what verified investing is all about. So on that note, guys, I want to get going here, or I have to get going to the trading floor to start trading here. Let's throw this back. Oh, nice. But listen, when it comes down to it, verified investing is here for you. I want to teach you guys everything I know through these game plans, through the courses, through the services. I want to do my best to help. And again, it's a hard world out there in investing. There's a lot of misinformation. The social media hype is ridiculous. It gets you to FOMO in at the highs, gets you to panic at the lows. It's the worst. Mainstream media is not much better. I mean, they're touting stocks right now that honestly people will regret buying, just like they did Cisco in 2000. So be aware of that. It's all about data. You look at the data, make up your own mind. Be independent. Make up your own freaking mind. That's what verified investing is all about, showing you the charts, the probabilities, everything like that. So on that note, guys, I bid you farewell. And again, I'm going to try to swing this. All right, I have to do